Hi, everybody. Let's have a great week. Hope you guys like my new offices. Welcome to TradeGateHub.com. I'm Dale, aka Coach. How's everyone doing today? Let's have a great week. All right, I want to keep this as something we're going to be going over every Monday to have this be not only analysis of the market, but a teaching experience. Was talking about the inside month that we had last month, and looking for last month's lows to be taken out as well as the prior month, which looks like the euro's on its way to accomplishing that. We could have this done by the end of the month, the next few weeks. Keep in mind that Powell has his confirmation hearing tomorrow if he wants to take any pressure off the velocity of higher yields. So that'll be an opportunity for him, although it is a renomination. So I'm not sure if they're going to be asking him that much about policy, except I think you could expect Elizabeth Warren to say he's a dangerous man. Danger, danger, he's tightening. So this is something we're looking for. I'm looking for. I want to see the euro make new lows for this move, not new lows, but new lows for this move. And I think this could be the dollar's last hurrah into 2022 before we see perhaps 130 again in the euro, maybe higher. We'll see how that works out. But for now, still looking for lower. Let's take a look at some shorter term TFs. So, we failed from this daily. Just move this around a little bit. There we go. Yesterday on Friday, but you look at this, and anyone who's trying to bottom pick this right now, what can you say about the euro? We did get oversold. And to me, what's bearish about the euro is that it's no longer oversold. All right. So all it is, it just moves sideways, correctional movement. Is it a base? It could be, first we'd have to start closing over 114. And that would be an important level for it to close above, we're 100 pips underneath it. Still my contention that we're going to take out this low and perhaps see it under the 111 handle. These lows here were 1180. So what was performing against the dollar is also peaking, and that's cable. So look at this divergence that we've had in cable. Last week attempted it, it didn't work. The Aussie worked, but not cable. But it doesn't mean just because something didn't work one week that it may not the next. And this is pretty negative action that we're getting from the 136 level in cable. I think that if you're not on board, if you had a rally, say back towards 580 or so, that I think it would be a shorting opportunity. I still think the cable's headed at least back to this 200 here at 3.5. And actually, I'm looking for cable to take out these lows and challenge the big round number of 130 over the coming weeks. So cable has held up quite well as expressed by the euro pound. Euro pound is moving sideways, making new lows, but with this kind of divergence that we're getting on multiple time frames, these new lows are not being confirmed. And in fact, EG should lead it. So we might get to a point in the next couple hundred pips to the downside in euro that cable is actually weaker than euro on this next decline, and that EG stabilizes or only makes marginal new lows. This to me is a sign of a dollar peak, not a sign of continuation of dollar strength, although I think there are levels that we still have not attained to the downside that I'm waiting to see them complete. The weakest currency, again, I was talking about sells. We had sells at 72.55 last week in euro and Aussie, excuse me, that were pasted here in our main trading room, chat room. And it's still my contention that we're going to get at least a 3 drive here in the Aussie 69. I wouldn't be surprised to see an overthrow and possibly even trade 68 or so. Do believe that this is going to end up being a pretty good buying opportunity in Aussie. Upper 60s, worst case, mid 60s, but actually Aussie was the strength today because euro came in about 40 lower. Actually, the cable, the Aussie was higher on the day, earlier in the day, and we did get to some interesting levels as 72.20. So looking at Aussie right here, looks to me like this was a failing rally up here at 72.80, 79. So stay short Aussie. That's the way it looks to me. I think part of it is risk off and part of it is commodities. People know I'm looking for another push lower in the gold market. So let's take a look at what's happening here in gold. The gold, again, it tried to rally back over this 1830 level and put in a pretty negative day as yields head up. I think this is going to be a level I'm going to be interested in the gold. And, you know, we're still about $50, $60 away. This could be accomplished in the next several weeks. I think it's going to be a nice buying opportunity. In fact, some of the miners also are flirting with new lows, still weaker than the bullion. And here's your look at silver. Just get back here and look at the silver right here. So silver even weaker than gold, and I'm looking for this double bottom to be taken out in the silver market. Actually looking for the potential of the $20 level. I have these speed lines and a lot of confluence here around 1950 to 2010. So I think that this $20 handle is going to be tested possibly all the way down to 19, but I think a nice long-term buying opportunity in the silver is going to take place at these levels. So I'm still negative silver and gold, still positive the dollar. And I did want to take a look at some other markets, outside markets besides the currency and the metals. So let me go to my other screen. And what I want to show is a share screen here. There you go. So S&Ps continue to be under a lot of pressure. NASDAQ as well. Really has been quite a dramatic move in both of them. Look at this, the daily. And, you know, where are we going to dig in our heels? Or are we just going to have a continued decline? NASDAQ being weaker. I would start to be careful with shorts here on some of these stock indexes, because if you look at some of these 2-hour charts waiting for RSI to come up on both the S&P. Here you go. So even though we're making new lows, the RSI isn't at this point of time. Tomorrow, Powell, if he wants to calm the market, any of you guys know who Peter Bookvar is. He said that the Fed is not data dependent, they're S&P dependent. So we've already had a 200 handle decline in S&Ps. So you're talking about 6%. We'll see if Powell wants to calm the waters a bit and get some type of bear market rally. And that's what I think that we could get, is a bear market rally in these markets, in the indexes over the next several days. You know, I talked about how weak Russell was as well. Russell down another 30 handles, and that this was just a failing rally in Russell. And we're on our way to challenge these lows. A lot of technicians will call this a major breakdown. And what's also important for the market is one of the strongest groups in the market has been the energy sector and oil shares. And they've been holding up the market along with banks and some cyclicals based upon higher yields. But, you know, we made new highs in the market, and this still could be a failing rally in the oil market up here. This would not be helpful to the overall averages if crude began to roll over again and we had something like this from up here around the 80 level. I think you could look for shorts there, and we're at least going to correct, I believe, to 75-ish and 71. But I have a hard time chasing crude. The time to chase it was right here, and this was a higher low while the market was selling off. Crude put in a higher low that was back in December. Something else to keep an eye on is the VIX. And the VIX, I was talking about it over the weekend, and it really didn't do much. And I think I mentioned it to Mike as well on Friday. And I thought about it. At first my thoughts were, well, maybe this break just, we're going to turn because there's no fear. But then I thought about it is that there's probably more downside to go because no fear is being priced in. 21's not a high VIX level, and we've had 7%, 8% lower in NASDAQ 100, and this is all the fear. The VIXN for NASDAQ is acting better than the VIX, but not exactly setting the world on fire right here with the VIX at 21. So perhaps there has to be more capitulation and fear before we get a turn. But I'd be very disappointed if I was long VIX instead of short the market through other instruments, because it's been a relatively feeble rally in VIX from the 16 level with all the damage that we've seen in the markets. So let's take a look at the 10-year yield. We're pushing the 180 level. I've been talking about 2% for a while. When we look at this, put up the RSI, 2% looks pretty viable to me. You can't fade this. You can't fade this because we're confirming the highs on the daily. We're confirming the highs on intraday charts. That's a 4. Here's the 2. Which what currency has the highest correlation to yields? Anyone out there want to make that? Tell me what they believe it is. You're right. Yeah, US dollar yen. So the yen has been affected a bit today with risk off. Not down a ton, but down 19. And it's my contention that the US dollar yen has not peaked out yet, because we have to look at what's going to happen here with the RSI when it comes up for me here. Let's see. Okay, waiting for the RSI because we did have confirmed highs on the yen on multiple time frames. And I'm a little slow here. This high was confirmed by momentum. There you go. So here's the RSI. Markets rarely peak when both price and momentum are confirming. So it doesn't always happen, but this was a pretty high momentum reading here. So I still think there's a chance, maybe during the next push up in the dollar to new highs, for both the US dollar yen to also make one more new high up above that 116 reading that we have here. And then I'll be taking a look at potentially yields peaking, also the dollar peaking. And if you look at both this and the dollar, perhaps the yen is not as strong as the dollar, but the dollar has been moving sideways since Thanksgiving. And to me, this is still, I guess it could be in distribution, but Friday's close look pretty weak and they just can't take this dollar down. So I'd like to see us complete this to 98, 97.50, and then I'll be looking for short dollar positions. By then, perhaps the euro's trading down there at new lows, back down towards that 111.80. And that the pound peaking here is going to make new lows for the move as well. So the way I see the market set up is that we have another low coming in euro under that 111.80, possibly under 111. That cable has another low, although there'll be stops at 34 and 33.5. Another rally in yen to set up some divergences for a possible topping formation in US dollar yen, on a break in gold that could take us back down towards this speed line that's coming in low 1730s, upper 1720s by then. Similar situation in the silver. where I have confluence down there right around the $20 level. And I did want to point out that the gold silver ratio looks like it's trying to put in a failing rally. Actually, I'd prefer one more new high in the gold silver ratio. And with that happening, we should have some divergences up there. As you can see, if we make a new high, perhaps we don't take out this RSI, because if you're a precious metal bull, you want gold silver ratio to be trending down, not up. So I think we're in a topping phase here as well, and still looking for silver to outperform when we get a top in the dollar and a rally in precious metals, looking for silver to outperform the gold. So that's the way things look to me. Don't try and bottom pick the dollar yet. Euro still looks heavy. I think we at least test this trend line. Same scenario in Aussie. Think that we're headed to new lows. So the only thing I think could change it would be, maybe for an hour or a day or two with what Chair Powell says during his renomination speech. And this break in S&Ps and risk is still following through to the downside. Don't be a hero. And looking at oil, be careful with your long positions in oil, because there's a possibility that this rally is also running its course, at least short term, in in the oil market. So be careful about being long here. You could be short the oil market with stops, say $1.50 above today's highs. But really like what's happening in cable. It's really a nice divergence on shorter time frames. I mean, this high that we had at 36, I think will stand. So you're really not late being short even at 35.5, and you're just wrong over last night's highs. I think there's some pretty good downside in cable in the coming days and weeks as well. And keep an eye on euro pound for the potential of, as I said earlier, a turning point in euro pound. I think will lead the peak in the dollar. So good hunting the rest of the day. And we're coming up to some major turning points. And this is really, I believe, the dollar's last hurrah for another couple hundred points to the upside. And then I think we'll be looking for reasons to short the dollar. I invite everyone to come and join us and mastermind with us here in TradeGateHub.com to post your charts, ask questions. Mike will be up in an hour and 13 minutes to give you his views on what's happening in equities as the carnage continues. And that's a wrap for me. Remember, don't just count your oil barrels or count your Krugerrands or even your crypto. And I do want to wrap it with crypto, because I was bearish Bitcoin for the last couple of weeks. You could go back on the videos. So why not take a little bit of a victory lap in Bitcoin? I had talked about a head and shoulders top in the market, which is exactly what happened. Was bearish before it got there, and now we're breaking down. I know some people have targets around 32. Also, this is the most oversold Bitcoin's been in quite some time. So it will need to recapture the 44,000 level to turn good from here. Looks like 33.78.6 is pretty much could be a layup from here. And if people thought that Bitcoin was a hedge for risk off in equities, they're learning something else here. Because when you have institutions involved, what happens in legacy markets also matters in crypto markets. So that's a wrap, everyone. I'll see you tomorrow. I'll be with Mike tomorrow, and stay tuned for Michael Venezia in an hour and 14 minutes. Good hunting, trade safe, trade well, and above all, be patient. That's a wrap. Adios.